Today, we're talking about what things make accounting firms attractive to buy, what's the right way for old firm owners to hand the keys off to new firm owners. We're going to beg for some golf tips for two guys who desperately need them. And you're going to hear about one of the most unique backstories of an accounting firm owner with our buddy, Chris Williams. All that here on Drink While You Think, the weekly happy hour conversation between a couple of guys who are building their accounting firm in really weird ways. I'm your host, Kenji, along with my co-founder and co-host, Matthew. Matthew, as always, tell us who the sponsor is today.
Okay, Kenji, we are still don't have a sponsor. So if you'd like to sponsor Drink While You Think, just send us beer, preferably beer from like a city that you're in that's kind of quirky, that represents your city, so we can try it online and talk about your cool product. Love if you're accounting firm, if you're a accounting firm, accounting technology, like just pick something from near you that's like your favorite beer and send it to us, and then we'll drink it online, and then you're the sponsor.
Yeah,
I tried a different approach. You tried a different approach. I tried a different approach. We're going to go.
We do have a lead on another potential sponsor. I can't drop their name now, but they did reach out and tell me. I was on their podcast. They're like, hey, we're sending you beer from one of our clients to Prairie, and we're going to be a sponsor.
Oh, so yeah. If you're another podcast, send us a thing and we'll talk about your podcast. Yeah, we have some beer potentially coming from Austin, Texas.
Ooh, okay. We like that.
So
all right,
we've got some people hinting around. So
we'll find out how that works out. Awesome. We got our buddy Chris on. Chris, welcome, my man. Tell us about you, where you're at, and then most importantly, close us out with what are you drinking today?
Awesome. Love it. Well, thanks for having me, guys. Great to be here, Kenji and Matt. So my name is Chris Williams. I am just north of San Francisco. I'm across the Bay Bridge in Sausalito. That's where I live. So Marin County, California. I grew up on the East Coast, DC, and I moved out here in 2015 for work. So I'm still a DC sports fan, but I've been in California for going on 7 years now. So I'm slowly becoming a convert. I run and operate System 6. So we're a cloud accounting firm. You know, we start like a lot of us with outsourced bookkeeping. We also add payroll, bill pay, invoicing support. I would say controllership light, certainly not CFO like you all, but really, frontline accounting finance function is what we're managing. We're a team of 25 across 13 states, about 160 clients, about $3 million of revenue. So that's kind of where we are today. And awesome. To close it out, I am drinking a local California beer. I'm drinking Fort Point. It's only 1 o'clock here, so I got to keep it light. It's a Kölsch. So it's not a double IPA, but it is a good, refreshing beer. So cheers, guys.
Oh, it's a solid one. Cheers, man. That's a
solid
great one. 4 Point's awesome, and I love a good Kölsch. All right, Matthew, what do you got? What are you drinking?
Well, I'm going the opposite way than light because it's East Coast here. So I'm going with Wicked Weed. This is the first of my 4 Wicked Weeds. This is their s'mores. It's a 9%er. It's an imperial stout brewed with chocolate, vanilla, and cinnamon, right? And they call it their s'mores, I think. So it's part of a series. I was really excited to get, looks like it was made for me. What are you drinking, Kenji?
That's made for you. That's one of my favorite breweries. I'm drinking one I've never heard of before. I found at a local place. It's called an Ape Snake, and it's by Prairie Artisan Ales out of Oklahoma. It's a dry hopped, dark farmhouse ale. Super weird. I've never seen it before. You know me, I always like to do my pour here on the thing. It kind of interesting. So we'll see about
it's a darker beer, huh?
Oh, that's a terrible pour. Good Lord.
Oh man,
it's awful. I'm gonna have to go to the bottle first.
A lot of foam, not a lot of beer there.
Terrible. Cheers, guys.
Cheers,
Chris. Welcome. Okay. Well, that's interesting. That's unique. Okay. Well, we're going to rate these later as we always do as we finish out. Cool. So Chris, a question for you. Tell me real quick, you get to tell us where you are and about System 6 a little bit, but tell me a little bit more about like where you got your accounting degree from, which accounting firms you've worked in previously. Like how many years have you been in the profession doing accounting?
So this is going to be an easy answer. It's a big goose egg. No accounting degree. I studied math and economics in undergrad, and I have not worked in an accounting firm before. So my accounting firm experience is just about 7 months because I'm just about 7 months into System 6. So you got me, Kenji.
I know. I had to tease that out there.
No.
Again, I just think the origin story is just super, super interesting and unique. And I guess I'll highlight it with this next follow-up. I mean, obviously, from your background, I think you've been in investment banking, you've been in private equity, You've done, I think, some kind of small market, like almost M&A kind of work. I mean, so what in the world, how in the world did you get into the accounting space? It's just such an interesting path that I think is incredibly unique. So I'd love to hear that backstory.
Yeah. So you teed it up a little there. Like, my out of college, I had a relatively traditional sort of like corporate finance experience. I started investment banking, did a couple of years there, and then moved out here for a private equity job where I worked for 3 years. And then I left, as a lot of people do, to go back to business school and get my MBA. And at the tail end of my private equity experience, we had bought a bigger business, but we're doing a lot of M&A, doing add-ons, as a lot of private equity firms like to do. And I was actually spending time inside the business, like on site in Denver where they were, helping them stand up. They'd never had like institutional capital. They'd never had lender reporting. So I was kind of helping them just get their FP&A up and running in a little bit more sophisticated manner. And that just was like my first experience working inside, a real business, not just sort of being in corporate finance and investing. And that just piqued my interest to being inside of a business and helping like build teams and things of that nature. And so I went to business school and discovered this path that's pretty common out of business schools and becoming more common, I think, just in general. It's called a search fund. But the basic concept is like, there's a lot of fantastic business owners out there who run small to medium-sized businesses who want to retire and maybe don't have a son or daughter or a GM across a million different industries. And so the basic idea is, if you're a young, energetic person who wants to get into operating and leading and building and growing and all the fun and all the not fun of, running a business, like you can start one, or you can go out and look for this retiring owner and try to put together a transaction, acquire the business and step into that seat. If it's a very small business, maybe you can do it on your own. Most of the time it's with some sort of individual investors who went down this path. They become your mentors, advisors, and then they help you acquire the business. So that's basically what I set out to do after school. Like I realized that sounds really appealing to me, to get to run a small business and help grow it and help do all the things that, we're trying to do today. And so, I set out in 2020 to look for a small business to acquire with a couple of mentors who are still with me today, and looked at a lot of different industries, found sort of cloud accounting early, left for a little bit to look at other stuff, came back to it, and ended up, acquiring System 6 in July 2021.
Wow.
That's
cool.
That is cool. Isn't that cool?
Yeah.
It's just a super interesting
I'm having a
story,
lot
I
of
think.
fun. Like, there's ups and downs, as you guys know, from running
sure.
any business.
Sure.
But I'm having a lot of fun. And I think there's a lot to be said about, having John really
I
energized.
guess that is unique. I mean, you mentioned this concept of a search fund, which I actually is new to me. I haven't heard of it. I don't know if you've heard of that before, Matthew. I guess because you, now I think you got your MBA at Stanford. Is that right?
Yep.
So is that, you're saying that was common? You saw others kind of doing some of the same thing?
I guess if you look at, percentage of the class, no, it's still probably, 10, 15% of the class go to do something like this, entrepreneurial acquisition. There's different forms it can take. There's some accelerators that do this, just like there's venture accelerators. There's, funds that will back you. There's individuals that will back you. So there's different versions of it. But at business schools, it's becoming, I think a decently known path, and certainly on campuses, a lot of people know about it. Not everyone takes the plunge, but it is definitely something that at business schools. And now I think people outside, candidly, like there's tax Twitter, there's search fund Twitter. There's people are just, it's starting to, like, it's still very small relative to the number of small businesses, but professional investing communities definitely are starting to get aware of what it is.
It's super interesting. And so the thesis around, you mentioned looking at cloud accounting, running into it and going away and coming back to it. I guess, what was it like high level about cloud accounting? Like what kind of got you?
Yeah. I think the thing you have to start with is like, okay, recognize the scenario of, any searcher is a super sort of unproven person, right? Stepping into a business that's not, that was run by a previous owner. So you kind of have to like start with, I'm looking for a business characteristics that as a new unproven owner, like I can step in and not have, everything fall apart, right? So if you're run some sort of business where all the sales goes through the owner, or, it's a contract business, there's no recurring revenue, like that creates a lot more leadership transition challenges. So, some of the things I was looking for that certainly my mentors were pushing for is, something with pretty sticky and consistent repeat revenue. Something that's in a growing industry. Again, like as a young, unproven operator, if you're like swimming upstream, that can be really, really hard, trying to turn something around in a challenging industry. So consistent revenue, good industry dynamics, and that includes also growth, but not, one dominant player where eventually you're going to get swallowed up by. There's some more nuanced stuff of, it can be good to acquire a business just in general that doesn't have a ton of CapEx. So there's good, cash flow conversion, like some of the more economic characteristics. But, I think the two overarching ones are good industry and, consistent, repeatable revenue, so that as the owner, you're not coming in day one, trying to go sell because, your sales from last month don't continue into this month and you're not in a challenging industry.
Gotcha.
So cloud accounting, like both of those are very, very true, right?
Fit the bill.
Check in the box.
Check the box. Yeah.
Exactly.
Check some boxes there. Yeah, for sure. And so now that, okay, you're now having to live out the thesis, like you're 7 months or so into, like, all right, let's see, what's any big things that have jumped out to you that are like, oh, this didn't either match my expectations, or anything that's surprising that was like, yeah, this part wasn't part of the initial investment thesis?
No, I mean, I would say that the revenue side is very much proven out. And if anything has been, I've been surprised, just how many people you talk to are like, oh, we need that. Or I know someone that needs that. I mean, I know you guys are growing like crazy, and everybody I've met in the industry seems to be growing like crazy. So I've felt better than expected about the revenue side of things. I would say, we're like, I didn't have full appreciation of, accounting firms are, at the end of the day, we're very tech enabled, but it's a people business, all day long. Our people are our product. We're fortunate, or I'm fortunate to have stepped into a place with a fantastic culture where, we haven't had a ton of people churn, and our team is generally very happy here. But that has just become much more of a focus for me than I think I expected, which is making sure our team feels awesome and continues to feel awesome. And, making sure that hiring is a big focus as well, because to grow, you need people. It's pretty linear one-on-one. And that's probably, I wouldn't say that's a huge issue, but it's just something I didn't have full appreciation to until I got into it.
Yeah.
What would you tell other search firm entrepreneurs? If they were looking at the space, would you warn them against it, or would you be like, oh, something to think about?
No, I mean, I think that it's not software, that's what, and a lot of people are looking for small software businesses where maybe it's an on-prem software business that you're going to take to the cloud, but there are the scalability of software. There's a reason it's the best business model in the world. That's the only caution that I sometimes give people of hey, if you want to double your business overnight, you can't really do that in accounting. You need to know that you're going to be in this for the long game. But when you step away from that, I really think it's a pretty awesome place to be, because you're providing a super critical service to your customers. There's a ton of need for it. It's fun to provide that service. We're helping our clients, and they really feel that. And then, yes, it is hard to hire, but it's still, we are able to hire. We're hiring remote people. More and more people want remote. We're not in a trades business where there's a massive shortage of people who want to work on site with their hands. So yes, there are people challenges, but I think relative to a lot of other service businesses, it feels really good once you recognize you're inside a service world.
Yeah, I think that's really well said. I think it is, as much as we talk in the cloud accounting space about, hey, we're using all these tools and we're modernizing, and it is, I think you nailed it. It is a people business. You and I had a chance to hang for a couple of days out in California, out in kind of more your neck of the woods, just a month ago. And I feel like most of the conversations we had with a bunch of our other friends who are firm owners were still around people. It didn't matter whether you were 7 months in, or whether us, we've been, almost 2 decades in.
Yeah.
It's still the people thing. And so it's not something that I think a new entrant would have to face that's dissimilar from anybody else in the industry. It's just, as they think about it from comparison to different industries, there is a little bit of that, you really are dependent on the people side of it. So,
and
sure.
I think from the outside, you got, I view it as That's an exciting challenge. It seems like you guys have figured it out, right? Like if you can run a place that's a fantastic place to work, that pays team well, that keeps them happy, that like makes them feel fulfilled, like that's awesome. Like that's what an awesome thing to do with your career. Like I think some people tend to be like, oh, it's a people intensive business, like burden. And I view it more as like, that's an opportunity to, run an awesome organization that people want to work for. And like, why would that not be something you want to take on?
It was cool. We had this week a little bit of a chance to enjoy that. I mean, within this time of COVID and the fact that we're all remote thing, a remote firm like you just find it's pretty limited. I mean, we're doing a lot of this, right? A lot of Zooms, a lot of things. And so this week we had a bunch of team come in town. We had a team dinner one night and it just was awesome. I was just reflecting on that today with some other team members who are there and are all flying back home now. And I was like, this is great. It was just really good to be amongst team. And that was really enjoyable to your point about like people are complicated. We all know that, but they're pretty awesome too. It's the same reason I think why we were so happy to all be together out in California and connecting as firm owners. And like, there's just a joy in being able to, let's all focus on something, work on something together collectively. So it can be, if you look at it that way, I think it can be really enjoyable in that regard. And I guess let me jump back again to maybe we always try to, again, I think the only people who listen to this, Matthew and I say are like, maybe occasionally like, our parents, hey mom, hey dad, listen to you.
Listen.
And then other firm owners, right? Other friends of ours here in the space. And so I guess as we're thinking about speaking to other firm owners, once you had the thesis overall for the space, and then, you picked System 6 and I've known Jeremy over there for years and some of the team who were there who are just awesome people, but without being like specific to System 6, what would you give as maybe a little bit of experience or advice to a firm owner? Like, what characteristics were like, really like that's exciting for an external investor or a new owner coming in? Were there things that were like, hey, if someone was like, I'd like to go that path or maybe find someone else who's coming out of B school like this to do it. Were there things you would tell someone like, hey, try to make sure you put an emphasis or focus on this in your business that would be beneficial?
Yeah. I mean, I think one thing that jumped out is like consistent in my mind. It's almost like consistency over excellence of metrics, like a lot of people when they're selling their business, cut a bunch of expenses the year before to make that margin look much better. Right. Or they like somehow sell really aggressively in the final year to position the business as a 30% growth business, not a 15% growth business. But like one of the things about System 6 that gave me a lot of confidence was, growth was solid, margins are solid, but like had also been very consistent. So it didn't feel like there was sort of any tricks being played ahead of time. And that just, that's a good thing. And then the other, good thing about when you see consistency is it just, again, you're insecure coming in as the new guy. And so to know that like it's been in a good place for year over year makes you feel a lot better about what those first 6 months are going to look like. The other thing is, it is definitely more attractive when there's some sort of middle management in place, running, especially the accounting day to day. Because, as a new firm owner who's not an accountant, certainly like I was not prepared to come in and, really jump into client service delivery. Like I would have figured it out if I needed to, but that would have probably been a bit choppy for our clients ultimately. But also, right, if there's like some baseline of the business running independently, like it never truly runs independently of the owner, but when there's some of that structure in place, it gives someone like me, the new person, time to come in and just learn and listen and not have to kind of jump in and take on a bunch of things without kind of knowing it, anything out of the gate. So, everybody talks about like, oh, the business runs on itself. Like that's never the case. Like, no firm is truly passive income. But there are some, especially I think on the service delivery side, if there's some management in place running that, gives the new owner more time to kind of learn and focus on the business, not the delivery of the service.
Yeah. I think that's it makes perfect sense. If this is probably, I thought about this a little more in advance, I probably should have reached out to Jeremy and be like, Jeremy, let's get you on here too.
Yeah, I'm sure we could get him on.
We probably could. Exactly. Now he's absolutely hanging out. And, but I guess if we were to try to play Jeremy a little bit here, of like what, Matthew and I have gone through this a bit when we've done deals, and, it's a little bit of almost getting into the head of the former owner, right? And I mentioned this at the top of the show of like, what are things that you think either Jeremy or Matthew, you and I could maybe even talk about, like whether it's Patty or Scott or Van, we're speaking for other people here, things that they should expect. Like when you're handing over the keys to the new owner or someone you're merging with or things like that. I don't know. Is there any counsel or advice that, and again, I'll put this to Matthew as well too, because we've done this well, that you would give to like say, hey, here's some things to just expect, like when you've got to hand that over. And we're probably talking about these being founders, owners, where it was their thing, like it was their baby. I've made Matthew be quiet here for a while. I'll let him go first because this is the longest Matthew's ever not talked. So I know he's itching. Matthew, what would you say if someone were to come in and buy your practice, like you should be prepared for, like in that transition, passing the baton?
Change sucks, and things are going to change. Like that's would be the thing. Like people don't like change, right? Especially people in control hate change, right? So I think the most difficult thing for everybody that we've kind of done a transaction with is making sure that they understand that there was some amount of change that was going to come, that we had some things figured out and they had some things figured out, and everybody's going to have to figure out how to change. And that kind of sucks a little bit. I think that would be my fortune cookie version of it. So I don't know.
Well, that's a good point. I guess when in our case, ours was a little different transactions to where we're pulling them into our organization.
Yeah, you're kind of merging.
Yeah. And that is a really good one of like where I don't know that.
But that is what you asked me.
You're right. But I think it's relevant here because it's giving a couple different flavors for people, right? You are either to maybe get pulled into another practice, or it could be more a situation like Chris's where there's just a new owner coming into place.
Yeah. I think it's a totally different, I think people need to know this though. Like if you merge with somebody versus if you sell to somebody like Chris, totally different worlds.
Totally.
Like Chris is expecting you to have the processes in place and everything like that. We're expecting you to come over and conform to mostly our processes, and stuff we learn from you that's better, we'll add in.
Yeah.
Right. Which is weird, right? Like it changes the dynamic, like especially with the first acquisition we did. So Van's firm, fundamentally, like somebody comes in like Chris in there, like it is a 100 very different acquisition than having to conform like, oh, you don't like Slack? Sorry. Like if you're a customer, right?
Yeah.
Like you don't mind that, right? Like you oh, I can conform to this and do this. Like this is just what the practice looks like. So you don't have to merge two cultures together. I'm more interested in Chris's. I think most people would be more interested in Chris because more often people are selling to somebody like Chris that is like taking over everything and like keeping the systems in place. Like what would you say to people would be the different thing? Because I'm talking from a merger's perspective.
Yeah, and the one thing I'll say before answering that is that was like absolutely at play with Jeremy when he was, thinking about selling. Like he was talking to a regional accounting firm that he very much likes and respects, but he was thinking about, hey, how does this look different for my team? And when there's someone like me stepping in, it's very much like business as usual. Yes, we've made some changes, we deployed practice ignition, whatever, but like the business for the most part looks pretty similar to what it did 6 months ago versus, hey, sell to a regional accounting firm. Like they might be a fantastic firm, but like there's going to be inevitably, like you said, Matt, a lot more change for the team. Like not even the owner, Jeremy's stepping out, but that I think for him was a big consideration, was just like what's going to be best for the rest of the team that he knows and loves and has built over 13 years. I would say one thing that does jump out almost pre-transaction is like, I think, yes, a lot of accounting firms are pretty, tightly buttoned up from a financial perspective. Like it's not incredibly challenging financial diligence perspective transaction, but there was definitely more legal stuff than I think Jeremy expected. And like we have a great relationship. We're still chatting all the time. Like it didn't go south at all, but it was just, oh man, this is not just like selling a house. There's especially I think if depending on who your buyer is, they, have investors behind them who have certain level of just like legal protections that need to be in documents and depth of legal work. And now, candidly, was a lesson for me. Like maybe I should have set that expectation higher up front of like, hey, this is going to feel like, even though this is a small business, it's probably going to feel like a bigger transaction. Like maybe we're over engineering it, but that's just like part of the professionalism that we're trying to, that's sort of asked of me by my backers. I think post close, honestly, like as much as you can just rip the Band-Aid and get out, if you're selling your practice, it's just like Jeremy did a pretty good job of that. He told his whole team beforehand, which was really helpful. I got to meet a lot of them beforehand. So there wasn't like this big, oh, here's the new owner moment. Like that can create a lot of tension. So slow rolling the news with the team, I think was really helpful. And then, if you can find a way to walk away pretty quickly, it just makes the transition easier for everybody. So that was something Jeremy still a part owner of the business and still like absolutely there as a resource, but we were trying to avoid having like, mom and dad dynamic at the firm. He was there a lot the first couple of weeks, like helping me, but it was him and I were doing a lot of one-on-ones. It wasn't sort of like co-managing.
That is I love that takeaway, because I think that's a place where looking back, even though it was a different type of transaction, I know that was an area I worried about a lot. Was like, oh, we don't want to do that too quickly. We don't want to, freak the team out. And looking back on that, I think you're absolutely right. I think actually making that quick, like doing some pre-planning and those introductions, but then ripping that Band-Aid off and just saying, hey, this is a transition. This is the way it's going to go. And I was, felt like I was kind of soft pedaling, like, all right, we're going to do this slow migration over. And I think it gets confusing. I think that is I absolutely, take that away as like, oh, that's probably not something that seemed like it was right to do to make it easier, but it wasn't. I think it was harder on people, and that wasn't the intent. But would you agree with that, Matthew, that we kind of, especially on our first one, it just felt like that was the case?
We F up a lot of stuff. So like, we should have changed a lot of stuff. I think we should have ripped the Band-Aid off faster, both places.
Yeah. And I think I think if it's rip the Band-Aid, it's literally just like kind of changing who's sort of the person at top. Like I did not come in, I think, especially in, a situation where it's like a new person coming in, I didn't come in and make a lot of changes. It was just like, hey, it's now Chris running the same weekly meeting that Jeremy used to run. And just like that was the real change that happened quickly. It wasn't like I then made a bunch of changes. It was just like, let's make clear that, who kind of the new leader is going forward.
Yeah, that makes sense. Yeah. I have a question for you, actually.
Yeah, shoot.
So after going through this, I have a question about economics.
Yeah.
Like, would you ever buy another firm to grow, or would like customer acquisition cost to us is so much lower organically than through firms? Like, what's the scenario where you would add another firm versus just do it yourself?
Yeah, I think it's when we, not in the near term, right? Because to your point, like growth is all there for the taking if you can have the people to serve it. I think, if I get to a position in the firm where like I just have the time to maybe go work on M&A on the side almost, and maybe that, there's an opportunity where you acquire and you integrate like you guys did, but maybe there's ways to sort of acquire and do less integration and almost have two businesses that are running a little bit separately, but, just kind of have same ownership structure. That is, I think, a scenario where I could see M&A happening. Like I know some people out there that are doing M&A in the space, and some of them are doing what you guys have done, integrating it all under one brand, and some are kind of owning several different brands. And then maybe they have a couple people up top that are sort of GMs overseeing several of those businesses. So that is, I guess, a simpler path to do M&A. And maybe if, I have in several years from now, have more of a team underneath that's running a lot of not only the day-to-day accounting, but all the day-to-day people stuff, the day-to-day recruiting, the day-to-day sales. I could see that being a use of my time. These businesses are spitting off cash, and like one way to use it is to go get some more scale through acquisition. But I feel like we just have enough to do, and there's enough on my plate that would be a huge distraction right now. So I think it's definitely down the line something I'd look at, but not immediate, because especially there's so much growth opportunity.
So just simpler.
Yeah.
In your business, we're seeing internal CAC is cheaper than acquisition CAC.
Yeah.
Are you seeing that as well?
Yeah, for sure. I mean, if you're the best you're going to buy a business at, right, is like 1x revenue, maybe a little less. And if it's a good cloud accounting firm, it's going to be a lot more than that. And you can definitely acquire customers for less than that.
Yeah.
I mean, we're not really doing much marketing, and we're still growing kind of 20% a year. We're a lot smaller than you guys, right? Like when you get to 10 million in revenue, like 20% is not just going to fall on your doorstep, but at a couple million in revenue, you can still just kind of work with referrals to do that growth.
Yeah. Interesting.
It's interesting. It is interesting. I do think we have a dynamic in the industry right now where growth is for the taking, is the way you put it, Chris. I think that's right.
Yeah.
As long as you need to have the supply side on the people we mentioned. You need to have someone who can come in and whether it's the owner or maybe a small sales team or something to go convert those deals. If you have those things, then the growth is there for the taking. And I was literally sitting next to you today, a guy running sales for a tech startup that's venture backed.
Yeah.
And he was like, we had the same conversation about acquisition CAC versus kind of, sales CAC. And he was like, oh my gosh, that's mind blowing. To him, that was like, oh, wow, that is so unusual and interesting that in your space you have that. But as a tech company, he was like, it's all about like, we can't grow fast enough through organic acquisition,
right,
or through organic, growth. We have to go out there and be looking. We're always looking for these. So it's just interesting to look at our space like that. And I think you're right though.
Yeah. And I think the other thing I've heard, I think you guys have kind of referenced this on podcasts and stuff too, is like, even if the CACs were exactly the same, if you're doing it organically, you get to control who that customer is. You get to onboard them the right way. Like it's just a lot easier than buying customers that, who knows what sort of systems and processes are in place, et cetera.
Well, the weird thing is now for us, like at our size, right? If you want to add $1 million in revenue, our sales team does that, right?
Yeah.
Like we could double our sales team and add $2 million in revenue if we want. And that's the average firm in the space.
Yeah. There's not that many bigger than that you.
Yeah.
And everybody doesn't mind bringing on, the customers over the year, like ratably that our sales team does, but like go buy a firm, like everybody, it affects everybody from all of the management team, all the leadership team, executives, all the leadership team, like everybody gets hit by that. And it just, it's hard. It's
totally
hard.
And to our point about like running businesses that people love working at, like if you drop that level of work on someone, that probably, for a lot of people on the team, it's yes, as the CEO, it's fun to get bigger. And, you look at the multiples and, oh yeah, I bought it for this, my business is worth that. But like, yeah, hey, does my team want to do this? That's another reason that wouldn't look at that anytime soon. Like, deal with that.
Yeah. For us, it's like, everybody's like, don't do that this year.
Yeah.
Like it would have to be something so compelling to them.
Yeah.
Like it has nothing to do with the economics of the deal. Even if we get a price right, like
totally,
it would have to be something so helpful and somebody over there, like additive to our team that we didn't have, like that would be compelling to our team versus growth. It's really just fascinating. It's just, I was just curious as to what you were seeing. So
yeah, that's awesome. I agree. It's exactly, this, it's an interesting challenge. Again, I think that when the same tech entrepreneur or head of sales sitting next to me today at lunch was asking this, and I said, he's like, what are you most excited about this year? I said, this is going to sound really boring and really lame. I said, we're just really excited to be like controlling growth and focus on some internal processes because of that exact thing you mentioned, Chris, and that you jumped on there, Matthew, is like, we've pushed the team pretty hard. We fatigued the team over the past year. Even people who aren't directly involved with deals, it just is a lot for them to handle. And it is so important to get the culture right and the people side right, because it's a people business. And I was like, yeah, it's not very glamorous or very sexy, but I'm really looking forward to having a year where we're kind of hunkering down and getting processes right and automating things and kind of doing some light RPA internally on some things to make life easier for everybody. Because we kind of owe that back to the team after the past 18 months of kind of what we've been through. So Anyway, all right. I want to, before we get to our final thing of always rating our beers, I do want to get to my final piece. And I mentioned this at the top. And so when we were out in California, I remember one of the other firm owners, I think he lives probably near you somewhere, Nicole from Momentum. You guys were talking about golf, like talking about playing golf together. And I was like, whenever I hear golf, I kind of perk up a little bit.
Yeah.
And so I happened to look in your background. I'm like, wait a minute, I think you may have even played golf in college. And I saw somewhere in one of your bios, I do a little bit of homework on this stuff. I'm like, I think Chris and I had the same exact first job, right? I worked also I worked at a golf course, picking up range balls, cleaning carts. Like I grew up around that. I always joke that like I kind of lived a little more of a modern version of Caddyshack. And so anyway, I grew up loving playing golf and played it a bit. Matthew does too. However, we haven't played in a long time. Just during pandemic and stuff like this. And Matthew, we got invited through a connection of Matthew, a family connection, to play like a world class, like
love it,
course way above our pay grade. And I'm trying to get my act together. Like Matthew, we have no business going to this course. I don't know if you want to tell Chris.
We're going to go play Winged Foot.
Love it. Wow.
So we're like, we got to get our shit together.
That's amazing. Right? US Open was there like 2 years ago.
It was just there 2 years ago, right? I think that was, who won that?
Bryson.
Oh, that was Bryson did.
Big boy.
Bryson did.
Yeah.
Big boy did.
Yeah.
Dude, Matthew, I mean, I'm kind of a little bit freaking out about all this. Like we've got to get our act together on this. So I don't know. All right, Chris, you're a much better golfer. Yeah. I can just know that we are. What do we need to do to get, are we just going to get murdered there at Wingfoot?
Well, I think
we're going to get murdered.
I think the first thing is like, you're putting pressure on yourself. That is like total setup for failure, especially with golf, because it's such a mental game. So all this like, oh, we got to get ready. We got to get, we got to go to the range. And like, I think if you position it from, I have to be ready to go to a place like that, it's going to go south. But if you're just like, hey, because even if you become the best golfer in the world over the next 2 months or whatever, like when you finally show up on property, you've just put too much pressure on yourself and you're going to revert to like, what it was. But I think if you just like view it as fun opportunity, like, yeah, I want to go hit some more golf balls and like have some fun at the driving range over the next couple of months and try to depressurize as much as you can. I know easier said than done. That is step one. I would say step two is like, it's great to, if you want to take, I don't know how much time you guys have, but if you like take a lesson or you know something about your swing that you're working on, like that's great. Do that at the driving range. But when you go to the golf course, you got to forget about that and just like pick your target, swing at the target. Because when you're playing golf, if you're trying to be too technical and like put your hands in this position because that's what you're working on the driving range, you lose all your athleticism. And there's a lot of just like hand-eye coordination that can really help you more than you expect. So in a very anti-accounting way, like the more technical you try to be on the golf course, the worse you perform. So you kind of just have to let it go. There's a very popular psychologist in sports who does a ton of golf, but he's kind of like, look, if you go play basketball, right, you're playing a game, like you go shoot, you're not thinking about where your elbow goes. You're just shooting at the basket. When you throw a baseball, you're not thinking about, you're just like looking at the target. And why don't we do that in golf? So I've been trying to adopt more of that lately, like be technical in the backyard at the net, but like when you go to the golf course, just try to play golf.
Oh man, that's good.
Have fun.
We can do that, right, Matthew? We can have fun. I know you'll have fun. I get a little more.
I'm just going to have fun. I'm not going to set any scoring records ever.
Yeah.
So, to me, the thing I get is I love. I mean, we both love being outdoors and playing golf, and this will be fun. This will be really a treat for the two of us. And I don't think I can get there, but also I do tend to put the pressure. I'm like, I'll get into like the whole like, oh my gosh, this is hallowed space and historic ground and all the things. I just have to kind of get like a little bit like, all right, just settle it down. Let's go have fun today. We're not in the office. We're going and doing this.
I have the accountant perspective. I pay less per stroke than any other golfer I know.
I love it. I love it.
For a round.
Yeah.
So I get to hit more strokes than everybody else for the same cost.
Yeah.
So.
And I'd say, Kenji, that's true. And like, you're going to feel when you're there, like the history, but instead of like making that pressure, just be like, oh, this is like, flip the script. Like, oh, this is cool. Like I get to go look at this thing that, you know,
Yeah.
Phil Mickelson did in 2005 or whenever, you know, he has big collapse there. Like, yeah, that's cool. I get to go see that in the clubhouse, not like, oh hollow ground.
Oh,
Yeah,
Chris, just so
that's
you know, Kenji's a shithead. He got to live at the Masters one summer.
Oh, wow. Wow. I mean,
That's a whole separate podcast.
Yeah, we need an
my Augusta National,
I get
my
really
Augusta
excited.
National days are a
No,
whole separate
he
podcast.
lived at Augusta National for summer.
That is
and he could play every night. Like
that is not the golf job I had.
No.
I was
nor was the one I was referring to at the top of this, the golf job either. This was a separate thing, but that's another time.
Just for golfers to know, Kenji sucks. Just to be
another time and place, Chris. We'll have many more drinks over those. I do have some good stories about Augusta National.
I would love to hear those one day. That's pretty cool.
That's awesome. All right, well let's land this plane here and rate
our beers.
Hold on, I've got mine here. I'm going to pull up our Matthew and I's favorite little app here.
What's the scale here?
Untappd app.
1 to 5.
Okay.
And so 1 to 5. So I'm going to rate my my ape snake that I have here. This was a very interesting, again, a dark like saison. I love saisons. It was dark. It was a little weird, interesting. I'm going to give it 3.75. I liked it. It was a little bit different.
That's kind of a little bit inflated. You didn't like it. That first sip just
threw me off. It threw me off because normally it has a good saison nose and flavor to it, but it's just so dark. It's like, look at that. Like, that's one of your beers, Matthew. It's just weird. It threw me off, but it's okay. I do like it. Matthew, give me what are you drinking again? You're drinking the
Wicked Weed S'mores.
Okay, the s'mores
from Wicked Weed.
Oh crap! Of course, there's too many of these damn things. Sorry.
See, this is why weed.
There it is.
There we go.
Got it. All right, Matthew, what are you going to give this guy?
It's a 4. It's a 4.
4. A good solid 4.
So
okay.
It's not phenomenal, but it's doable. It's 9%. I'm starting to feel it, but that's all right.
Yeah, mine was 7.9, so I'm not too far behind you.
Kenji, it's 4-point KSA F4 like FO.
There it is. KSA right there. That's okay.
This is going to be a good one because
this is a 4. Like it doesn't.
You can give it more if it's a favorite. You can inch it up if it's a favorite.
I think like for me, you know, I can't distinguish 3.75, 4.25, but I feel like 4 is very solid. I know what I'm getting. I love it. It's not going to blow my socks off, you know, because it's a staple beer. But that's why I picked it.
Super
awesome.
fair. That's right. That's right. How we would rate that too. So some pretty good solid beers this go around.
Yeah,
so
good work.
Well, cheers,
Chris,
you guys.
Brother, we
Cheers,
appreciate
everyone.
you being on, my man. This was awesome.
Thank you. I'd love to. I'm happy to come back anytime, and I look forward to next time we're together in person. And Matt,
we'll
Matthew,
do that for sure. Maybe next time get Jeremy.
Yeah.
Hey, Jeremy, we love you, brother. We should have had you on. Maybe we'll get you on next time with all of us. But cheers, everyone. Thanks for listening. We'll catch you all next time on Drink White.
Cheers. Have a good weekend.